Imagine you are standing on the roof of the tallest building in the world. You can see everything from up there. The people look like ants. The cars look like toys. You feel powerful. You feel like you own the sky. That is exactly how silver investors felt just a few days ago. The price was soaring. It hit $120. It was history in the making. People were cheering. They were shouting that silver was finally going to the moon. And then in the blink of an eye, someone pushed the building over. It didn't just fall, it smashed. We watched silver plummet from $120 all the way down to $71 in hours. It was violent. It was bloody. It was the single biggest crash since your parents were babies back in 1980. If you were watching the screen, it looked like a red waterfall that just wouldn't stop. Panic swept through the market like a wildfire in a dry forest. People were selling everything they had just to make the pain stop. But here's the secret that the news isn't telling you. Here's the whisper that the smart money is sharing while everyone else is screaming. The building didn't fall because it was weak. The building didn't fall because nobody wanted to live there anymore. The building fell because the people who owned the land decided to pull the rug out from under it. Welcome to Money Rewind. I am not here to read you the news. I am here to show you the crime scene. We are going to look at the fingerprints left on the charts, uncover the hidden trap that was set for you, and figure out if this is the end of the world or the buying opportunity of a lifetime. To understand what just happened, we have to go back in time. We have to travel back to a year called 1980. Back then, two brothers named the Hunt brothers tried to buy all the silver in the world. They were greedy and they were smart. They bought so much silver that the price exploded upwards. But then the people in charge of the market, the referees, changed the rules. They said, you can't buy on credit anymore. The Hunt brothers went broke instantly. The price crashed. It was a massacre. This week, history didn't just rhyme. It sang the exact same song. On Monday, the market was hot. Too hot. Silver was trading like a crazy tech stock. It wasn't acting like money. It was acting like a lottery ticket. The people running the exchange, a group called the CME, looked at this and decided it was time to turn off the music. They raised the margin requirements. Now, margin is a fancy word for a down payment. Imagine you want to buy 100 candy bars, but you only have money for 10. Your friend lends you the rest of the money. That is called leverage. It's great when the price of candy goes up because you make a huge profit. But what happens if your friend suddenly says, hey, I need more cash right now, or I'm taking all the candy back? That is exactly what happened. The CME told the big hedge funds and the speculators, you need to show us more cash right now. Nobody had the cash. They were all in. They had bet everything on the price going up. So when the referee demanded more money, they had no choice. They had to sell. It wasn't a decision. It was a forced liquidation. It was like a crowded theater where someone yells, fire, and locks the main exit. Everyone rushed for the tiny side door at the same time. They trampled each other. They sold at any price they could get just to survive. That is why the price fell so fast. It wasn't because silver is worthless. It was because the gamblers were broke. But while the gamblers were crying, something very strange was happening in the real world. And this is the clue that tells us this might be a giant trap. If you walked into a coin shop today, a real shop with a real door, and asked to buy a silver eagle coin, do you think the owner would sell it to you for the crash price of $81? Absolutely not. I checked the numbers. The paper price on your computer screen says $81.61, but the street price for a real 2026 American Eagle is nearly $98. Think about that for a second. That is a massive difference. That is nearly a $20 gap. The computer says one thing, but reality says another. The dealers know the truth. They know that the metal is still rare. They know that the mines are still empty. They are refusing to sell their treasure for cheap just because some gamblers on Wall Street got a margin call. This is the disconnect. This is the battle between paper and rock. The paper market is crashing. But the rock market, the physical stuff, is holding the line. And speaking of holding the line, let's talk about gold. Gold is the older brother in this family. When silver acts like a crazy teenager, crashing the car and getting in trouble, gold is usually the responsible adult. And right now, gold is proving why it is the king. Yes, gold fell. It dropped from highs of $5,500 down to around $4,500. That hurts. But look at where it is now. It is already bouncing back, trading at $4,167. While silver is still shaking on the floor, gold is dusting off its suit and standing up straight. The gold to silver ratio tells us a fascinating story. This ratio measures how many ounces of silver it takes to buy 1 ounce of gold. Last week, when silver was flying high, that number was low around 45, but now it has shot up to 58. This means silver is weak right now. It means that in a crisis, people still trust gold more. Gold is the safe haven. When the house is on fire, you grab the gold first. Silver is amazing, but it is volatile. It moves like lightning, fast up and fast down. Now, before we dig deeper into who pulled the trigger on this crash, I want to pause. If you are watching this and feeling your heart race, if you are looking at your portfolio and seeing red, you are not alone. This channel, Manira, is built for moments exactly like this. We don't panic, we investigate. If you want to make sure you get the signal when the dust settles, hit that subscribe button right now. It's the best way to make sure you don't miss the next move in this wild game. Okay, let's look at the villain of our story again. We talked about the margin call, but there was another character in the room. His name is the dollar. The US dollar is the nemesis of gold and silver. When the dollar gets strong, metals usually get weak. It's like a teeter-totter. When one goes up, the other goes down. For a long time, people thought the dollar was going to die. They thought interest rates were going to zero. But then a news bomb dropped. President Trump nominated Kevin Warsh to be the next chairman of the Federal Reserve. Now, you might be asking, who is Kevin Warsh and why should I care? Think of the Federal Reserve as the bank that controls the volume of money. Kevin Warsh is seen as a hawk. In bird terms, a hawk is aggressive. A hawk likes to hunt. The market believes that Kevin Warsh wants a strong dollar. He isn't the type of guy who's going to print free money for everyone. When the market heard his name, the dollar index, the DXY, shot up to 97.47. It flexed its muscles. The trader said, "Oh no, the free money party is over, the dollar is back." This strength in the dollar put heavy pressure on gold and silver. It was the perfect storm. First, you had the margin call pushing sellers out the door. Then you had a strong dollar pushing prices down from the top. It was a double punch that knocked the wind out of the entire market. But here is where it gets really interesting. We have to look at the other players on the field. Usually people say Bitcoin is digital gold. They say that when the world gets scary, Bitcoin and gold will hold hands and fly to the moon together. But this week, that friendship broke. While gold was crashing and then bouncing, Bitcoin just sat there. It consolidated. It didn't rally to save the day. It didn't crash as hard as silver, but it certainly didn't act like a safe haven. It acted like a risk asset. It paused. This tells us that right now, in the middle of this panic, the big money, the central banks, the sovereign nations, they aren't buying Bitcoin yet. They are buying the yellow metal. Gold is proving it is the ultimate liquidity provider. When things get truly bad, gold is the only thing that matters. And then there is the strangest relationship of all, silver and Nvidia. Nvidia is the king of the AI revolution. It makes the chips that run the robots. For a brief shining moment last week, silver was worth more than Nvidia. The total value of all the silver in the world flipped the value of this massive tech company. That, my friends, was the top signal. When silver starts trying to be a tech stock, watch out. Silver is money. Yes. But lately, the market has been trading it as an AI industrial component. They are buying silver because they think the robots need it. And that is true. They do. But when the tech stocks took a breather, when people decided to take profits on their AI bets, they sold silver too. Silver got caught in the crossfire. It was wearing the wrong uniform. It was dressed like a tech stock, so it got sold like a tech stock. So where does that leave us? Are we going to zero? Is the bull market dead? Let's look at the map. I am just reading the map here. I am not telling you where to drive your car, but the levels are very clear. For gold, we have a line in the sand. This is the support zone between $4,880 and $4,500. This was the level where the rocket ship launched from last time. As long as gold stays above this line, the structure is safe. It's just a bruised knee, not a broken leg. On the upside, we have a ceiling at $5,200. This is the resistance. The market is going to be scared to go back up there for a while. It has PTSD. It needs time to heal. But look at the RSI. That stands for Relative Strength Index. It's like a speedometer. Last week, the speedometer was pinned at the maximum. The engine was overheating. It was screaming, overbought 85. Now the crash fixed that. The speedometer is back to neutral. The froth is gone. The engine has cooled down. This is actually healthy, even if it feels terrible. Now look at silver. Silver is in a much more dangerous spot. The crash low was 71. That is our floor. That is the edge of the cliff. If silver falls below $71, there is nothing to stop it until $60. That is a scary drop. However, the bounce has been fierce. We are already back to $81. The intraday indicators were screaming oversold. It fell too far, too fast. It was like stretching a rubber band until it snapped back. But silver has a heavy roof to punch through now. All those people who bought at $90, they are trapped. They are praying for the price to come back to 90 so they can sell and get their money back. That creates a wall of sellers. The zone between $90 and $96 is going to be a war zone. It will be very hard to cross. So what is the headline story? What is the narrative that you will tell your friends when they ask you why your silver coins lost value? The story is the margin call wipeout. The fundamental reasons to own silver haven't changed. The sun is still shining, so we still need solar panels. The AI revolution is still happening, so we still need chips. The government is still in debt, so we still need real money. None of that changed on Monday. The only thing that changed was the leverage. This was a flush, a cleansing. The market is like a living organism. Sometimes it eats too much junk food, too much leverage, too much debt, and it gets sick. It needs to vomit. That is what we just watched. The market vomited out the weak speculators. It purged the system. Now the weak hands are out. They sold at the bottom. They took the loss. And who bought their silver? The strong hands. The people who were waiting with cash, the people who looked at the panic and saw a discount. The ETFs like GLD are seeing inflows right now. That means the big boys are stepping in while the little guys are running out. This is the oldest trick in the book. Scare the public, crash the price, and then scoop up the assets for pennies on the dollar. It is a transfer of wealth from the impatient to the patient, from the fearful to the brave. The question you have to ask yourself is, which one are you? Are you holding a paper contract that can be cancelled by a margin call? Or are you holding the physical metal that no one can hack, no one can erase, and no one can margin call? The disconnect between the paper price and the physical price is the smoking gun. It proves that the real asset is still in high demand. The shopkeepers know it, the banks know it, and now you know it. The storm is not over. The volatility is going to continue. We might see more red days. We might see $71 tested again. It is going to be a bumpy ride. But remember, the view from the top of the building is beautiful. But you can only enjoy it if you don't get pushed off. Don't let them shake you out of your position if you believe in the long term. This is a game of psychology. They want you to feel pain. They want you to feel fear. Because when you are afraid, you make mistakes. Stay calm. Watch the levels. Watch $4,500 on gold. Watch $71 on silver. And keep your eyes on the real prize, the physical metal that has survived empires, wars, and crashes for 5,000 years. We are watching History Money Rewind family. Do not blink. I want to hear from you. This is the most important part of the video. I want you to go down to the comments section right now and tell me, do you think silver will hold $71 or are we crashing to $50? I read every single comment and I want to know what the smart money you is thinking. And if you found value in this deep dive, if you want the truth that the mainstream media is too afraid to tell you, make sure you are subscribed to Money Rewind. We are building a community of critical thinkers, and we need you in our ranks. Until next time, keep your head on a swivel and watch. You're 6. The game is on.